Hello everyone. Today in this video we are going to talk about profitability analysis. So this video covers in full the concept related to profitability analysis, which is known as COPA. So in this video we are going to cover identify differences between account based and costing based profitability analysis, define organizational and data structures in COPA, understand characteristics derivation, understand the purpose of valuation, understand the dynamic creation of profitability segment master data, define actual data flows, explain the planning process, explain the reporting options, explain predictive accounting. So in this video, we are going to discuss the purpose and design of account and costing based COPA. We will begin with a review of how an operating concern is generated and then explain how actual data flows to COPA. Finally, we will take on the most commonly used planning and reporting features. As a controlling consultant, you will need tools for analyzing contribution margin. Depending on the industry of your customers, this requirement could be high level with perhaps material cost and total overhead cost being the focus. If your customer produces goods or services, requirements could be far more detailed with perhaps more cost buckets and a need for splitting fixed costs and variable costs. COPA is the SAP solution that meets these reporting requirements. COPA is fundamentally a reporting tool. As the recipient of data flowing from all other financial accounting and CO components, in many ways, all roads lead to COPA. As CO design decisions are made, you must consider the end reporting requirements of your clients and determine whether COPA integration should occur. A good example is integration with cost object controlling. In previous video, we discussed the settings required for production order variances to flow to COPA as well as the complex sales order results analysis methods that can be used to align FI postings with revenue recognition calculations. So we are going to cover account based versus costing based COPA, configuration of the operating concern, data structures, characteristic derivation, configuration of valuation strategy, planning, reporting. In this section, we will discuss operating concerns as organizational structures, the data structures required, and how data flows from FICO to COPA. We also review some basic planning and reporting features. Overview of profitability analysis. COPA is quite different component of CO as compared to others in this text. COPA, the acronym for profitability analysis, is purely a reporting feature in SAP S/4HANA. COPA receives postings as business transactions are occurring and stores this data in various tables to be used in contribution margin reporting. Each company may have its own specific definition and calculation method for contribution margin. A good place to start is with a simple formula. Revenue minus variable cost minus fixed cost equal to contribution margin. Right away you can see this formula is a bit different from the usual external reporting requirement, which looks something like this formula. Revenue minus cost of goods sold minus taxes equal to net profit. To further complicate the design of a contribution margin formula, likely you will need information at the material or quantity level to effectively determine where your company is making and losing profit. The usual reporting methods just can't support that level of detail. COPA is the only component that can handle these challenges. Account based COPA. With account based COPA, you can analyze data at the general ledger account level. Within the posted values for the general ledger revenue account, you can slice and dice data by, for example, customer, product, and region. Values posted in this account are quite easy to reconcile to FI by GL account. Until SAP S/4HANA, this type of COPA was not widely used. One shortcoming is easy to understand by looking at the GLCOGS account. While you could still slice and dice data by, for example, customer, product, and region, you could not distinguish between the variable and fixed portions of that value. CO does not pass that level of detail to FI. With SAP S/4HANA, many improvements have been made to account based COPA, so many that you may now be hearing the phrase profitability analysis from the Universal Journal rather than account based COPA. We will look at those improvements throughout this video. Costing based COPA. Costing based COPA can analyze data at the value field level. A value field is created to contain the amounts and quantities you want to analyze. Various techniques are used in configuration to map objects such as pricing conditions, GL accounts, and cost components to value fields. Within the posted values for the value field revenue, you can slice and dice data by, for example, customer, product, and region. Within the posted values for the value fields, material cost and labor cost, you can slice and dice data by, for example, customer, product, and region, and by variable and fixed content. This ability to separate variable and fixed cost is why costing based COPA has long been a requirement for manufacturers. So the figure shows a comparison between these two types of COPA before SAP S/4HANA. Notice the revenues and the result or contribution margin are the same values. Also notice the level of detail in the costing based report. Variable and fixed cost are split and selling general and administrative costs are below contribution margin. So let us see the figure. So account based versus costing based COPA prior to SAP S/4HANA. Account based cost and revenue elements, costing based is value fields. So here notice the revenues. So shows a comparison between the two types of COPA before SAP S/4HANA. Notice the revenues and the result or contribution margin are the same values. So the revenues and the result or contribution margin. This one, the result is 1 lakh and contribution margin 3 is also 1 lakh. Are the same values. Also notice level of detail in the costing based report. Variable and fixed costs are split. Variables and fixed costs are split. And selling general and administrative costs are below contribution margin 2. Selling general and administrative costs. Okay. So this is costing based is a very detailed report, and account based, as said, has so it is at general ledger account level. It is based on the cost elements. So COPA in the Universal Journal. In SAP S4 HANA, data that was historically stored in several tables is now found in Universal Journal. The Universal Journal is technically named Table AC.A for actual data and Table AC.P for planned data, which together contain all the details from all applications. Regarding COPA, account-based COPA data is now stored in table AC.A. Additionally, SAP S4 HANA includes features to provide most of the contribution margin data, previously only available in costing-based COPA in table AC.A. Now, far more detail can be contained in a single reporting table than was possible prior to SAP S/4HANA. As we continue in this chapter, we will look at these features in more detail. So, organizational structures. As we have seen since in our previous videos, organizational structure is always the first definition you will make in configuration. COPA has a unique organizational structure, the operating concern. Before we review its definition, let us first understand the all important SAP client level object. The following settings are quite technical as they deal with ABAP objects and table structures. Two topics you should have basic knowledge of both as a CO consultant and for the purposes of the certification exam. Within an SAP client, you must create characteristics and value fields in the field catalog which are defined as follows. Characteristics. These elements define items or objects for the user to analyze. They are the bywords, that means what do you want to analyze data by in a report, by customer, by product, by region, etc. Value fields. These elements contain the amounts and quantities you want to analyze in a report. Revenue, material cost, labor cost, etc. So characteristics are used by both account based and costing based COPA. Value fields are used by costing based COPA only. In this section, we will take a closer look at both characteristics and value fields as well as the operating concern itself. Characteristics. When creating characteristics, you can choose between the following four categories: fixed, predefined, reference to SAP tables, custom created. The fixed. These characteristics are mandatory objects required by the SAP system. Generally, these objects reference the organizational structure and master data from the posted line item. Generally, these objects reference the organizational structure and master data from the posted line item. Examples include company code, controlling area, profit center, material number, plant, etc. Predefined. These characteristics are sample or example objects found in the system. These objects may have been created from a sample operating concern. These objects may have been created from a sample operating concern. Reference to SAP tables. These objects already exist in other applications such as material management, production planning, and sales and distribution. Examples include material group, customer group, etc. Custom created. These objects do not exist in other applications and are created for use only in COPA reporting. So an example is a strategic business unit. The names of these objects must begin with WW. So when using referenced or custom created characteristics, you will have the option of using check tables to validate characteristic values entered at the time of posting. Let us look at a few characteristics. When transferring a posting to COPA, you will need an analysis by the material group. As shown in the figure 7.2, the COPA characteristic material group KMMA KL will be copied from the origin table MARA and origin field MATKL. The status of this characteristic is A, active. So there is a warning. A characteristic must be marked as active for it to be assigned to an operating concern. You also need to analyze by an internal designation called the strategic business unit. This object does not exist in any table used by another SAP application. You will also need to analyze by an internal designation called the strategic business unit. This object does not exist in any table used by another SAP application. As shown in the figure, the COPA characteristic WWSBU strategic business unit has been created with no origin table. The status of this characteristic is A. So if you create a referenced characteristic, since the data exists in SAP, the system will create a check table to be used to validate the field content at posting. If you create a custom characteristic and select a check table, you must create your own list of possible entries for that field using transaction KESI, maintain characteristics values. So custom characteristic created. Value fields. The next objects to create are the value fields. Two categories of value fields exist: predefined and custom. Predefined. These value fields are sample or example objects found in the system. These objects may have been created from a sample operating concern. Custom. These value fields are created to meet your customer's requirements. Custom value fields must begin with W. There are no fixed value fields like fixed characteristics. Value fields have an indicator for amount or quantity as well an aggregation rule because these fields can collect amount and quantities. Three aggregation rules are available: sum, average and LAS. All amounts will be summed. That means the value field will be increased or decreased with each posting. For example, if the first posted amount to the value field for revenue is $100 and the second posted amount to the value field for revenue is $50, the sum of the value field is $150. Average. All amounts will be averaged. For example, if the first posted quantity to the quantity field number of orders is 10 and the second posted quantity is 50, the average of the quantity field is 30. LAS. Only the last posted amount or quantity will appear. For example, if the first posted quantity to the quantity field number of employees is 25 and the second posted quantity is 30, the last posting of 30 is displayed in the value field. Let us look at a few value fields. As shown in this figure, the value field revenue uses the sum aggregation and is of the amount value field type. The status of this value field is A. Custom amount value field, summation amount, and this is revenue value field VV010. As shown in this figure, the value field invoiced quantity uses the sum aggregation rule and is of the quantity value field type. The status of this value field is active. So if a value field is not marked as active, it cannot be assigned to an operating concern. So we have another warning. As of the time of writing, the system limits the number of value fields you can assign to an operating concern. The current limit is between 120 and 200 value fields. Operating concern. As we learned in our previous videos, COPA has its own organizational structure, the operating concern. Controlling areas can be assigned to the same operating concern if the following are true. The fiscal year is the same. So controlling areas can be assigned to the same operating concern if the fiscal year is the same. The same multi-dimensional contribution reporting requirement must be fulfilled. This second requirement is very important because the definition of objects used in COPA reporting is performed at the operating concern level. This second requirement is very important because the definition of objects used in COPA reporting is performed at the operating concern level. 3 tabs are maintained to define an operating concern. Data structure. Maintained to define an data structure. Under this tab, characteristics and values fields are added to the operating concern from the client level field catalog. Attributes. Under this tab, the currency and fiscal year variant are defined. This tab, indicators govern the generation of objects. So the COPA has its own, that is a operation. So these are the similar features should be available to assign the controlling areas to the same operating concern. The fiscal year should be same multidimensional contribution reporting requirement must be fulfilled. So as shown in this figure, the data structure tab has indicators for both types of COPA, account based and costing based, and is where characteristics and value fields are assigned. So click the display or change button to navigate to edit data structure. Data structure screen as shown in this figure. Select characteristics from the transfer from list on the right to add them to our operating concern. So under the value field tab, you can add value fields using the same method. As shown in this figure, the operating concern currency and fiscal year variant are defined on the attributes tab. So for costing based COPA, you may also select company code types and profit center currency types to be evaluated in addition to the operating concern currency. So for costing based COPA, you may also select company code types and profit center currency types to be evaluated in addition to the operating concern currency. As shown in this figure, once the operating concern has been saved and activated, these indicators should be green. If you make changes to the characteristics or value fields of the operating concern, you must reactivate these structures. Otherwise, the operating concern status remains inactive and changes to these structures are not effective. So let us now summarize the tasks required to define COPA data structures. So create characteristics and values, create the operating concern, define attributes and save, define data structures by copying characteristics and value fields and activating or generating the. So the first one is create characteristics and values, create operating concern. The third one is define data structures by copying characteristics and value fields and activating or generating the operating concern. When the operating concern is generated, many tables are created for the data to be stored in. The following list shows some of the main tables with XXX indicating the 4-character key for the operating concern. Account based COPA uses the following tables which exist also for the other cost objects. Table COEP, actual line items for value types other than value types 4 and 11. Table COEJ, plan line items. Table AC Doc A, Universal Journal. Note: in SAP S4 HANA, COPA characteristics are not captured in the FI line item table BSEG. Rather, characteristics are captured in table AC Doc A. As the operating concern is generated, table AC Doc A is extended. So, summarize the task required to define the COPA structure. So we need characteristics and values, operating concerns and data structures by copying characteristics and value fields and activating and generating the operating concern. So when the operating concern is generated, many tables are created for the data to store in. The following list shows some of the main tables with XXX indicating the 4-character key of the operating concern. So account based COPA uses the following tables which exist also for the other cost objects. So it is like table COEP, COEJ, AC, Doc A. COEP for actual line items for value types other than value types 4 and 11. COEJ for plan line items, AC Doc A, Universal Journal. So the main note here is in SAP S4 HANA, COPA characteristics are not captured in the FI line item table BSEG. Rather, characteristics are captured in the table AC.K. As the operating concern is generated, table AC.K is extended. Costing based COPA uses the following set of tables which are unique. Table CE1 and the operating concern actual line items. Table CE2, table CE3 summary records, table CE4 profitability segment definitions. Account and costing based COPA share a single table, table CE4 and the operating concern. This table controls the creation of the profitability segment, which is technically the cost object for COPA. In other components of CO, you must create a master record or cost object before any postings can occur. COPA creates the profitability segment dynamically as postings are occurring. The table CE4 manages the creation and numbering of profitability segments. Master data. As we have established, COPA is a bit different in its design and configuration than other CO components. This theme will continue as we discuss master data configuration. Two important settings are required for COPA master data: characteristic derivation, a series of steps called a strategy to populate characteristics values. For example, using a table lookup to get a customer group from the customer master. A series of steps to populate characteristics values. For example, using a table lookup to get a customer group from a customer master. Valuation is strategy to determine which material cost estimate to use to populate material and labor value fields. For example, using the material standard cost component split to get the fixed and variable COGS. Valuation can also be used with a COPA costing sheet to calculate values not present on the posting or with a user exit. So, as we have established, COPA is a bit different in its design and configuration. So, master data configuration. Two important settings are required for COPA master data: characteristics derivation and valuation. A series of steps called a strategy to populate characteristics values. For example, using a table lookup to get a customer group from the customer master. Valuation is strategy to determine which material cost estimate to use to populate. So, for valuation, a strategy to determine which material cost estimate to use to populate material and labor value fields. For example, using the material standard cost component split to get the fixed and variable COGS. Valuation can also be used with a COPA costing sheet to calculate values not present on the posting or with a user exit. We will take a look at both settings in the following sections. So, characteristic derivation. A characteristic derivation strategy may contain several steps to derive the needed characteristics. When the operating concern is generated, the system will create as many derivation steps as possible. You may make changes to some system generated steps. You will need to create your own steps for any user created characteristics. Each step is built on one of four customizable techniques. Derivation of organizational units. This technique consists of fixed steps automatically generated by the system. Examples of fixed steps include the derivation company code and controlling area, table lookup, accessing an existing SAP table for the characteristic value. An example is looking up the material group from the material master table. A rule. These can be used to incorporate user defined logic. Example, if SAP characteristic division equal to 21, use A as the strategic business unit. Move and clear. These can be used to transfer one characteristic value to another or to remove a value under specified conditions. Example, if ship to party is blank, move sold to party to the ship to characteristic. So each step is built on one of four customizable techniques. So it is like derivation of organizational units, table lookup, rule, move and clear. Derivation of organizational unit. This technique consists of fixed steps automatically generated by this. Examples of fixed steps include the derivation, company code and the controlling area, table lookup, accessing an existing SAP table for the characteristic value. An example is looking up the material group from the material master table. Rule. These can be used to incorporate user defined logic. Example, if SAP characteristic division equal to 21, use A as the strategic business unit. Move and clear. These can be used to transfer one characteristic value to another or to remove a value under specified conditions. Example, if ship to party is blank, move sold to party to the ship to characteristic. Let us look at a few characteristic derivation steps. So this table shows an example of table lookup derivation step. In this case, we need to derive a material group from the COPA product number. Under the definition tab, in the source fields for table lookup, the MARA table is specified as the source for the COPA product number characteristic. In the assignment of table fields to target fields section, the field MATKL from the MARA table will be used as the characteristic value for the COPA characteristic MATKL. So use the condition tab to indicate under what conditions this step should be applied. Use the attributes tab to indicate if the system should return an error if this step fails. So in this figure shows an example of a rule derivation step. First, remember that our WWSBU strat business unit characteristic is a user created characteristic as shown earlier in figure. This object does not exist in standard SAP. Rule for strategic business unit. This shows an example of a rule derivation step. Business unit characteristic is user created characteristic. This object does not exist in the standard SAP. Let us say we want to use the COPA division characteristic to assign a custom characteristic value. Under the definition tab, in the source fields section, the COPA characteristics part is named as the source. In the target fields section, The COPA characteristic WWSBU is named as target. So this we can see here. COPA characteristic part is named as the source. In the target sections, WWSBU is named as target. The system cannot create derivation steps for custom characteristics. You must create these steps. If you do not, the system cannot capture the characteristic values for reporting. So as shown in this figure, the COPA division values have been assigned to the COPA strat business unit values. In COPA document, if the division number is 21, then the system will derive A to fill out the strat business unit field for example. As each posting occurs, the derivation strategy is executed. The system assigns as many characteristic values as possible and determines a profitability segment number based on each unique combination of these characteristic values. Unlike other master data we have seen in this book, your users don't need to keep track of this profitability segment master data number. Profitability segments are technical objects only. Instead of a specific master record number, users can analyze all the data by characteristic values themselves. For example, by customer, by region, or by product. Valuation. Due to its special design, valuation is used with costing based COPA only. Remember that account based COPA reports by cost element and ties off to FIGL account values. Valuation can provide calculated amounts that were not posted to FI as well as more granular details than FI about product cost. A valuation strategy may contain several user defined steps to supplement details about costs. When the operating concern is generated, the system does not create a valuation strategy. A user-defined valuation strategy may contain the following: COPA costing sheet, used to calculate imputed or accrued values in costing based COPA only. SD pricing procedures, available for planning only, used to plan revenue and cost of sales. Product costing details, used to transfer the material cost component split to costing based COPA only. User exit, used to create custom ABAP coding not supplied by the three preceding points. So user defined valuation strategy may contain the following: COPA costing sheet, SD pricing procedures, product costing details. So a user defined valuation strategy must be assigned to a point of valuation and a record type. Optionally, a valuation strategy may be assigned to a plan version. The point of valuation indicates when the strategy is going to be executed. The selections supplied by SAP are real-time valuation of actual data, periodic revaluation of actual data, manual planning, automatic planning. Create a costing key to indicate which material cost estimate to use as shown in this figure. So assign the costing key to any characteristic. For example, should a different cost estimate be used for finished goods instead of Semi-finished goods? If so, then assign the costing key to a material type. By cost component structure, assign each cost component to a costing based COPA value field as shown in figure. So in this figure, in this slide, we can see that we are creating a costing key to indicate which material cost estimate to use. So we are determining material cost estimate, transfer standard cost estimate, costing variant, costing version, period indicator. Plant used for reading cost estimate, use line item plant as cost estimate plant. So assign the costing key to any characteristic. Assign the costing key to any characteristic. For example, should a different cost estimate be used for finished goods instead of semi-finished goods? If so, then assign the costing key to a material type. By cost component structure, assign each cost component to costing based COPA value field. So in this, by cost component structure, so what we are going to do is assign each cost component to a costing based COPA value field. So we are going to assign the cost component to a costing based COPA value field. So in this screenshot we can see operating concern and cost component structure and PV cost component and enhancements with Universal Journal. Now that you have a basic understanding of the design of COPA prior to SAP S4HANA, let us return to features available in SAP S4HANA that enhance the legacy account based and costing based COPA features. So splitting structures or profiles. To bring the required level of detail about COGS and production variances, SAP S4HANA introduced two splitting structures, often referred to as profiles, to assign cost components to GL account numbers. These profiles, in effect, replace costing based mappings created by the PA transfer structures. The next few figures shows examples of each splitting structure or profile. As shown in this figure, cost components are assigned to GL account numbers by controlling area and chart of accounts. In SAP S4HANA, COPA from the Universal Journal replaces the costing based valuation or costing key design by splitting these costs directly in the GL. So as shown in this figure, production variance categories are also assigned to GL account numbers by controlling area and chart of accounts. In SAP S4HANA, COPA from the Universal Journal also replaces the costing based PA transfer structure design by splitting these costs directly in the GL. These splitting profiles are found in the General Ledger periodic processing integration materials management section of the configuration menu. Activate derivation for items without profitability segment. With this feature, you can activate the derivation of profitability characteristics for line items in the Universal Journal that do not carry an account assignment to a profitability segment. This process is possible for cost or revenue line items with the following account assignments: cost center, production order, internal order, project, and sales order. One benefit is the ability to report these costs with detailed characteristic values prior to the periodic settlement of each cost object. You may hear this SAP S4 HANA feature referred to as the attributed profitability segment. Flow of actual data. For account based COPA in the Universal Journal, the flow of actual data is achieved simply by posting to a GL account and including the relevant characteristic values. These will populate table AC Doc A. There are few actual postings that require automatic account assignment to a profitability segment in transaction OKB9 to pass characteristics to account based COPA. These postings originate in materials management and include the following: purchasing price differences on material purchases, changes from inventory revaluations, changes from the transfer of inventories. For costing based COPA, you must determine which value fields to use for posting all business transactions. For costing based COPA, you must determine which value fields to use for uh, posting all business transactions. In the configuration menu, a separate folder exists for each type of value flow from FI to costing based COPA. Source of value fields. So the component, source of business transaction, example of value fields to update, and method. So component is sales and distribution. So source of business transaction is billing document. An example of value fields to update is revenue COGS and method pricing condition to value field. Product cost controlling. Product cost controlling, material cost estimate, variable material cost, fixed labor cost, valuation strategy and costing key, financial accounting, GL posting, commission, bad debt, PA transfer structure, overhead management, cost center and internal order settlement, SG and A cost, PA transfer structure, project systems, work breakdown structure settlement, R&D cost, PA transfer structure, cost object controlling, production order settlement, variances by category, PA transfer structure. So these are the source of value fields. So billing document, material cost estimate for product. Each SD pricing condition that flows to costing based COPA must be assigned to a value field as shown in this figure. A PA transfer structure is used to assign cost by cost element to a value field. Let us look in detail at example shown in the figure. The PA transfer structure FI contains two assignment lines, 010 costs and 020 revenue. For assignment line 010 costs in controlling area A000, use the cost element group T costs for assignment to value field VV366. Other costs for assignment line 020 revenue in controlling area A000, use the cost element group revenue for assignment to value field VV010 revenue. So for example, if a posting is made in the FI GL to a COPA relevant cost element in the group T cost. Costing based COPA will update the value field other cost. For actual postings that are transferred from FI, PA transfer structure FI is required. To transfer production order variances at settlement, you must create a separate PA transfer structure. This structure is similar to the structure FI reviewed earlier, but it has one additional level of detail in the definition of source. As shown in this figure, you assign a cost element by range or by group to the assignment row of the transfer structure along with the category of variance that was calculated during the period and close of cost object controlling. So you must then assign the PA transfer structure for production order settlement to the production order settlement profile as discussed before. So PA transfer structure for production order settlement. So in this figure we assign a cost element by range or group to the assignment row of this transfer structure. Planning is an optional feature that you can use for revenue and cost planning with COPA characteristics, which provides more detail than planning by GL account by leveraging our bywords. For example, revenue by customer and product rather than only by the revenue GL account. Planning is an optional feature that you can use for revenue and cost planning with COPA characteristics, which provides more detail than planning by GL account by leveraging our bywords. For example, revenue by customer and product rather than only by the revenue GL account. For account based COPA in the Universal Journal, planning would be entered via embedded SAP business planning and consolidation. For costing based COPA, the two most commonly used planning methods for costing based COPA are as follows. Manual planning, where planning data is entered in the system manually. Automatic planning, where planning data is calculated by the system specifically using the feature top-down distribution. Top-down distribution can use reference data against high-level planning to provide more granularity. Before we look at some examples of each planning method, we need to review the purpose and design of the planning layout. Planning layout. For the entry of plan data, you can customize a layout of columns, rows, and characteristics you want to plan for. These attributes can be assigned to each value column in the layout as follows. A currency or a unit field for the value field, a long text, characteristics, a distribution key, for example, to divide an annual value evenly over the period being planned, a formula. Let us review the example shown in this figure. In this example, we want to plan the value fields invoiced quantity and revenue by the characteristics customer and product. The price or product column is not a value field rather than the price or product column is not a value field, rather this field represents a formula. Manual planning. To enter plan data manually, you would first navigate to transaction KEPM in the application menu as shown in this figure. Within transaction KEPM, you would make the following selections. The planning level 54F29 indicates what objects are to be planned. In this example, customer, record type and the year 2018. The planning package indicates which version to plan. In this example, version 0. The planning method indicates whether you enter, display or change the planning data. In this case, enter planning data. The parameter set indicates the planning layout as shown in this figure. So the parameter set indicates the planning layout as shown in this figure. In this case, S4F29, currency EUR, 0 suppression in display or posting, valuation strategy using valuation customizing. Top-down distribution. Top-down distribution can use reference data against high-level planning to provide more granularity. The following capabilities are enabled by top-down distribution. Planning can be input by product group and revenue. Reference data by product group for the past year can be assigned. The system can distribute the planned revenue by the individual products sold from the reference data. The system can distribute the planned revenue by the individual products sold from the reference data. So the figure shows a simple example of the top-down distribution process. This table represents plan entries in transaction KEPM. We have planned revenue dollars by the characteristic product group A at a fairly high level. This table represents the reference data we want to use to deconstruct product group A. In this case, the billing documents record type F from the year 2018. In this table, we have executed the top-down distribution calculation using the transaction KEPM. The system found 3 products with sales quantities for product group A. Product A1 had a quantity of 100. Product A2 had a quantity of 200. Product A3 had a quantity of 100. This table represents the output of the top-down distribution calculation. The $10,000 revenue planned for product group A in table 1 has now been distributed to the product level. So let us see the numbers. Manually planned values. Product A 10,000. So planned values in transaction KEPM. Product group A period or year, record type F, and execute top-down distribution. Tracing factors found from reference data. Product A1, A2, A3, product group A, and quantities 100, 200 and 100. So define reference data. So planning result of top-down distribution. So the revenue is like this. We have shared that. Reporting. Let us start with account-based COPA. Since all data resides in the Universal Journal Table, standard reports are available for contribution margin analysis. So this figure shows an example of the market segment SAP Fiori app. In this example, you will see GL account balances in company code currency with the characteristic product sold group in the lead column. Now you can analyze cost and revenue by the market segment of product group in a standard report. Alternatively, you must create your own drill down reports for costing based COPA using the report painter tool. These reports use a matrix of data that allows you to select one or more characteristics for a slice and dice analysis. User access can be restricted to various levels of the drill down information. An example of a user created contribution margin report is shown in another example. So in this figure we can see that market example of market segment in SAP Fiori app. We will see the GL account balances in the company code currency with the characteristic product sold group in the lead column. So now we see the figure, the other figure which shows user created contribution margin report. So this is the user created costing based user created report. Predictive accounting. Account based COPA can benefit from the use of the optional prediction ledger. The prediction ledger supports the analysis of activities which haven't yet occurred and therefore aren't yet financial postings. This feature is activated in several steps. First, the prediction ledger must be created by company code in FI configuration. For ledger settings, a new ledger can be created as ledger type prediction and commitments. Once active, you can use transaction SE11 to maintain table fin SV PRD or LDNR with the new ledger. Then you can activate predictive accounting for incoming sales order. This will create postings in the prediction ledger for the equivalent of costing based record type A. An additional option for using the prediction ledger is to include statistical pricing conditions from the SD sales order. These new options enable forecasting of the future revenue, COGS, and the contribution margin of sales order that have yet to be delivered and billed by reporting from the predictive ledger. So if we want to see what actually the predictive ledger is, it is an account based COPA which can benefit from the use of optional prediction ledger. So this feature is activated in several steps. First, prediction ledger must be created by company code, and we have to use transaction to maintain the table SE11. You can activate predictive accounting for incoming sales orders, and in an additional option for using prediction ledger is to include statistical pricing condition from the SD sales order. So we can use the options to enable forecasting for future revenues and contribution margin of sales order. So this is like predicting the future things yet to be delivered and billed. So with this we have completed the COPA theory part. Thank you for watching this video.